and welcome to the Business Agenda. This is the TV show that's setting the pace in terms of economic discourse in Zimbabwe. We'll speak to decision makers, captains of industry, big and small businesses, all in a bid to try and chart a course of where Zimbabwe should get to and how it will get there. To kick off this program, we thought what better way than to speak to two men who've been there, seen it, and done it all. One in the trenches of the corporate sector, running one of Zimbabwe's biggest companies. The other, profiling and analyzing Zimbabwe's economy for more than 4 decades. Joe Mutizwa and John Robertson are my guests. This is the Business Agenda. This is the Business Agenda. My name is Farai Mwakutuya, and my first guest tonight is none other than the founder and CEO of Pathways Africa. He sits on the boards of a number of companies. He's an author, but many of you may know him in his former life as CEO of Delta Corporation. Mr. Joe Mutizwa, great to have you on the Business Agenda. Thank you for joining us.
Farai, it's very good to be here. Thank you for inviting me.
Great. Now, for the last almost 2 decades, I'd imagine that a lot of executives in the corporate sector have been in survival mode. And many people acknowledge that things have changed now. There's a new sentiment, a new sense of optimism, and perhaps a time to adjust the sails. Can that be done? Changing the psyche and the mentality that we've had from survival to saying, look, now we can actually grow and thrive.
I think it can be done, but it will take a lot of convincing. As you can appreciate, confidence has been very fragile for a long time. And to rebuild that takes a lot of effort. But I'm convinced myself that it can be done.
Mm-hmm. You have been one of the people I've seen being very optimistic on social media, on Twitter, hailing, amongst other things, the new cabinet and saying that it sets the right tone. Why are you so confident? What makes you so confident?
Well, I think there are a number of dimensions, Farai. I think when one looks at the composition of that cabinet, one sees very notable personalities there. The new Minister of Finance, for example, Dr. Mutuli. He is highly regarded across the world, not just here in Zimbabwe, but internationally. He has worked for international financial institutions. He has got excellent communications with the IMF, the World Bank, the African Development Bank. He's a researcher in his own right. He very deeply understands finance and economics. In fact, I would equate him to the late Bernard Chidzero. He's of that stature. Mm-hmm. Therefore, Zimbabwe is very fortunate to have people like that. Mm-hmm. And when you add to that a number of technocrats that are in that cabinet, Winston Chitando, for example, the architect Biggie Matiza, for example, and a few others, that gives credence to the cabinet. It gives a bit of confidence. So people watching Zimbabwe, investors watching Zimbabwe from outside, see those personalities there, and they're encouraged by that. So that's the first dimension. I think the second dimension is just the age profile has come off. I know I'm talking against myself, being the older generation, but I think you have seen an infusion of energetic young people coming into cabinet. Thirdly, I think there's been a very determined effort to compress, to streamline the cabinet. The number of ministers has come off quite substantially, and this is commendable. There's a fourth very important dimension too, this gender, much broader gender diversity. So I think there was a concerted effort. His Excellency did an excellent job to bring in a lot of young female deputy ministers and at ministerial level. So yeah, if you look at it objectively, I think it's a very well-balanced cabinet.
The question that many people now say is, look, it looks great on paper. Proof of the pudding is in the eating. One of the things that I certainly have found quite encouraging is this issue of accountability, where the president is saying, come up with your 100-day plans and report your achievements or lack of to the public. A new way of doing things.
I think that's the easy part. I think the people that are in that cabinet say to me that they're very hard-working people, whom I have no doubt will be able to apply themselves. That's the easy bit. I think the more difficult part is, will they be given the space that they need? Will they be given the support that they deserve? will no spanners, banana skins be thrown in their way? That's the big unknown. And I think my appeal to the president would be to do as much as he can to protect them. I think if he can give them the protection and the support that they need and deserve, then I think we'll be on to something very, very exciting in the near term.
Talking about support and that interaction and the need to be perhaps honest with each other. Let me put this to you, and I've often believed that the corporate sector, business leaders in this country have perhaps not been as honest, as candid as they should be with government. Elsewhere, private sector leads government, not the scenario here in Zimbabwe and certainly across much of Africa. Do you think that there is enough honesty?
I think it's a fair comment. I think I agree with you that the private sector here could have done more, should have been much more forward looking, much more bold in terms of their engagement with the president and the government. But of late, there's been a lot of that. If I can speak of my own organization, you know, you may be aware, Farai, that there's an organization called the ZSE Forum, which represents the 63 companies listed on the Zimbabwe Stock Exchange. I happen to be chairman of the steering committee of that. We have been engaging behind the scenes very, very strongly at the level of the president. In fact, the president was kind enough to give us audience way back in February. And I led a team to meet the president. And we were very candid in our exchange. We followed that up with a written document to say to the president, this is what needs to be done. This is what the private sector can do to support you. And we made recommendations, very strong ones, and I hope they'll be taken on board. So yeah, is that enough, you may ask? Of course not. I think we can do much more. The organized business communities can do much more. And here I'm talking about the CZIs, the ZNCCs, the Chamber of Mines, the banking sector community. All those can come together. What has been lacking, Farai, is the coordination of all those bodies so that we speak with one voice. I think we've tended to speak in different fora, at cross purposes sometimes. True. And the Minister of Industry, in fact, has called us together and said, hey, listen, if you want to be much more impactful in your dialogue with government, come together. And I think that process is underway.
Talking very quickly about ZSC, when you speak to, because we know, activity there is dominated by foreign investors, foreign buyers and traders, just from your engagement with some of those foreign investors, the people out there, what are their initial reactions to what's happening here? Are they ready to come?
I can say without any doubt at all that the sentiments we're getting, and this is at sentiment level at this stage, is a very positive one. That people are seeing, are liking what they're seeing. They like the composition of the cabinet. They like the reforms that the government has started to embark upon. Let me just highlight a couple of those. People were taken by surprise when the Indigenization Act was radically reformed way back in February, March this year. This went beyond the expectations of many investors. In fact, we were pleasantly surprised by that. And that gave them an indication, a very powerful signal, that perhaps the government that is there today means business, that when they promise something, they will deliver on it. But let's be candid, it's balanced and fair. There's a certain measure of skepticism, Farai. And that skepticism will only go away when we follow through, when this cabinet that has been assembled is given the leeway to run with things, to implement bold measures, and government is seen to be marching lock in step together as one. Then the foreign investor will say, look, Zimbabwe is now ready for business.
We'll talk a bit more about those bold measures when we return from this short break. This is the Business Agenda. We're going to take a short break. Do stay with us. This discussion will continue shortly. The Business Agenda continues with my guest, Mr. Joe Mutizwa, founder and CEO of JSM Strategic Partnerships. Mr. Mutizwa, before we enter the break, you spoke about a lot of positives, obviously a lot of optimism, positive sentiment. Let's talk about some of the key priorities that you think need to be done in terms of getting our industry back on track.
Farai, maybe before I do that, it's important to appreciate where we are, the current reality. And the current reality is that our economy is in a mess. We have seen an economy that has been shrinking for the better part of the last 30 years. Unemployment is at a very, very high level, in the 90s. Most of the economy has been informalized. We know, for example, that a large part of the population is living below the poverty datum line. So that alone, industry is operating at close to 50% capacity utilization. And that is a serious problem for the economy. So that's where we are. And nobody owes us a living. So we have to actually pull ourselves up by the bootstraps, if you like. So what needs to be done? What would I consider to be the key priorities going forward? I think there are 4 baskets, if I can put it like that, 4 key priority areas. The first one is reform that is related to politics and governance, because that's what the rest of the world is looking at. Will they be able to be kind of a political realignment in Zimbabwe? Will there be good corporate governance coming through? And I think people are expecting that, investors are expecting that. So that needs to be tackled. And what do I mean by that? Head-on tackling of corruption, which, as we all appreciate, is very deeply entrenched in Zimbabwe. And unless we tackle corruption, we will not be able to get very, very far indeed. There are other things that need to be tackled in that governance space, but that's number one. The second one is to do with physical measures that need to be taken. And those won't be pleasant. It will be very bitter medicine. We've been spending way beyond our means. In fact, the growth of the economy that we've seen in the recent past is driven by expansionary fiscal policy, the printing of money, basically, if you like. That has to be gradually weaned off. And that's not going to be pretty. There are going to be a lot of people who will be unhappy about that, who are current beneficiaries of that policy. But if we are to get out of where we are, we need to do that. There are currency reforms that need to be done. The newly appointed Minister of Finance has already articulated the measures that he wants to take. And I don't need to go over them, but they are to do with restoring the value of the currency so that we as Zimbabweans have a currency that is stable, that is strong, that reflects, in fact, the unit of value in the economy, that manufacturers and other economic players can look at and say, we have a currency. Okay, so the currency reforms are urgent. They need to be done very, very urgently. You need to get rid of the parallel market that we are seeing out in the streets so that it's brought onto the formal market. And there'll be a lot of people who are unhappy with that, but I think it has to happen. And number 4, you have, in fact, to stimulate foreign direct investment as well as domestic investment as well as diaspora investment. Now, all those 3 will only happen when we have addressed the first 3 baskets I've talked about. Politics and governance, the fiscal reforms, and the currency reforms. Investment follows. It doesn't run ahead of. It follows the reforms that I've talked about. So it's very, very clear priority list for me.
Let me throw in something else there and ask you this let's talk about the S word, sanctions. What do they mean to this mix of things that needs to be done?
The S word is the current reality. In fact, it's not just there. ZIDERA is there. We know that it was passed by the US Congress recently, although in slightly modified form, but it is there. And it is the big elephant in the room. And ZIDERA is for real. It, in fact, restricts Zimbabwe's ability to interact financially with other parts of the world. So, and we are expected as a country to do certain things before ZIDERA will be expunged. I don't think it's impossible for us to do the things that are required with ZIDERA. I am sure that given the engagement that the government has already embarked on, we'll be way on that track pretty shortly. But it has to be addressed. It cannot be ignored. As long as ZIDERA exists, Zimbabwe cannot reach its optimum level of growth because it stops us from accessing certain lines of credit from International Monetary Fund, World Bank, and other international institutions. So ZIDERA has to be dealt with. Sanctions are for real.
Let's talk a bit about industries again, coming back to the industries, and a lot of the talk, certainly at a regional level, is about industrialization, and I think certainly that is a path that Zimbabwe wants to pursue. But I often ask, what is it that we can manufacture here that isn't already being manufactured for cheaper?
If the Minister of Finance was to ask me for my views on industrialization, I would say to him, Minister, our cost structures are not competitive. It will take us a while for our local manufacturers to become competitive. From a point of view of the equipment that we have, as you are aware, Farai, that equipment is mostly obsolete. From our cost structures, in terms of wages and efficiencies, we are not competitive. From a technology point of view, we are way, way behind. I think the quickest gain we can have is in the services sector, tourism, financial services, quick wins that we can actually score in agriculture, where we have a competitive advantage. Resuscitation of the manufacturing sector, obviously we want that. But to think of industrialization using the old mindset of labor-intensive industries, even the president has said that, we want to automate. We want to put in technology. So the old model of industrialization is not going to be the way forward. We've got to become smart at the way we choose to industrialize. And we ought to realize that, in fact, there are industries which can be resuscitated tomorrow and be accelerated very quickly, particularly tourism and the financial services sector. Easy pickings, easy wins that are waiting for us, in fact, to stimulate them. Okay? And all they need is a policy framework that allows them to start running. And that is what I think the new cabinet should look at very, very quickly.
Coming up with the right policies, walking the talk, essentially.
Precisely.
I want to thank you so much, Mr. Mutizwa, for coming to the program. It's been great having you here.
It's a pleasure being here. Thank you very much indeed.
Joe Mutizwa was my guest in this first part of the program. When I return, I'm speaking to economist John Robertson. This is the Business Agenda. Don't go away. Welcome back to the Business Agenda. Thank you for staying with us. I'm now speaking to a veteran economist who's been analyzing and tracking Zimbabwe's economy from before independence, 1970 to be precise. John Robertson, it is a pleasure to have you on the program. Thank you for joining us.
Thank you very much.
Now, in the past, I've heard certain people refer to you as an alarmist, as a prophet of doom, because you predicted some of the challenges that Zimbabwe would face, some of the challenges that bedeviled Zimbabwe in the 2008-2009 era. But you were spot on with many of those predictions, hyperinflation, for instance. And so now we'll ask you to look into your crystal ball again and ask you what you see in terms of the future of Zimbabwe going forward from here.
We do face a lot of uncertainties now because we have yet to see how the policies will be allowed to work out. But we do have many promises that are looking very encouraging now, because it would appear that the new government will follow policies that will actually bring back the investors. It's really investment we need to create the jobs, and the key issue that this country needs are the jobs for so many millions of our young people who at this moment cannot find work. We've got a huge informal sector because they're very good at surviving, but this is no way to plan the future. So I'm looking towards the investment that is likely to happen if the promises are kept.
What are some of those promises?
The promises relate to getting rid of the difficulties that have been holding up the investment decisions. There are a great many discouragements that have been put in the way, barriers that have stopped people making the investment decisions. They're choosing other countries to move to. There's 200 other countries around the world offering more attractive investment conditions than we are. So they've got many options. We have a great need of those investors, so we have to try very much harder to make them want to come to this country. And the barriers that stand in their way right now have been sort of listed by the new government. I would add a few other barriers that they don't want to accept as barriers at this stage, but if we can restore confidence in the property rights and the ownership rights of the assets that business people build, and don't threaten them at any time with the confiscation of those assets by any means, such as indigenization, or the relinquishment of mining claims, or the relinquishment of farmland. This sort of thing has interfered with development and growth over the years. It's interfered with our productive capacity. And the reason this country is in such a bad state right now is that we destroyed a lot of the country's productive capacity. So we're now importing things we used to make, and what we can make is now so expensive we can't export them anymore. So we've got other distortions that we need to clear, one of which is the cost structure. And I see news reports right now that trade unions are becoming actively engaged in negotiating for wage increases. We are already too expensive as a source of supply. If we increase our costs any further, we will price ourselves out of the markets that we are trying to capture. So we need to be very responsible in the way we treat the opportunities and the possibilities that lie before us today.
Easy for us to say on a program like this, but when you speak to the workers represented by those unions you've just spoken about, are walking into shops today, are seeing goods higher than they were a month ago or 2 months ago, and utilities, things that they're having to pay for are a lot higher. So how do you convince them that we need to be responsible, that we need this period of adjusting our prices, our cost of doing business, so we are able to be more competitive?
It is a complicated exercise, this, but the problem is we're looking at the symptoms of deeper problems. And the reasons the costs are so high is partly because of the lack of confidence and the fact that people are sending money out of the country if they get half a chance to do so. They'll say, this valuable real money will be safer in another country, let me send it away while I can. Now, that's the reason for the scarcity of money. The scarcity of money is driving up the cost of importing goods because people are paying a premium to buy the foreign currency to pay for those imports. And if confidence returns, we will reduce the costs because the money will be flowing into the country and not out of the country.
What are your thoughts on resolving that currency issue you spoke about? We've heard the incoming finance minister speak about doing away with the bond note. What else would you prescribe? Should we join the Rand Monetary Union, use the Rand, for instance, which is an ongoing debate, to use the US dollar, Rand, or come up with our own currency again?
The main problem with that debate is you first got to make the money before you can decide what currency to hold it into. You've got to make the money first, and having made it, we are just as well off with the US dollar. People keep saying South Africa is a major trading partner, but nearly everything we export, we get paid US dollars for. Gold, platinum, tobacco, all of these are paid for in US dollars. We need not look at the Rand as a major currency for the region because the US dollar is still the more important one for us. We need to deserve those values, and we need to become more productive. Now there's the requirement on the investors. They're the ones who've got to invest in the better machines so that the employees can be more productive. It's not the employees' fault that they are working with old machines, which makes them inefficient and makes the products they make no longer saleable on the world's markets where things have developed. But we've got to catch up by dragging the investors onto the scene now, bringing money to the country, and therefore overcoming that same scarcity of foreign currency with inflows of new foreign capital. We can borrow money, but the lenders outside this country want security. So one of the ways we can improve upon the security we can offer the potential foreign lenders is to restore the collateral value of agricultural land. Right now that cannot be used as security for a loan, but if we can re-securitize our land, foreign banks can lend to domestic banks who can then lend to local farmers, and we can recapitalize the country with foreign money that we can borrow, provided we've got enough security to offer the foreign banks. Now, we did ourselves an injury by taking that land off the market. We can restore our ability to borrow abroad if we put the land back onto the market. So that's a primary requirement for this recovery of confidence.
You mentioned debt, and the minute you say that, we already know Zimbabwe is choking, battling, struggling with this sovereign debt. How do we resolve that?
Sovereign debt is one thing. The debt I'm talking about is money that will be borrowed by private individuals for private investments. Now, we do need, as a country, to recognize that we still have these large debts. But in order to repay the sovereign debt, the country has to have a favorable balance of trade. Right now, we've got a massively it's a negative balance of trade. The money is flowing out of the country far faster than it's flowing in, because we're spending about $1 billion more on imports every 3 months than we are earning from our exports. So that's what's got to change, and we can only do that by rebuilding our manufacturing capacity, overcoming our need to import food. It's ridiculous that we should be a food importer when we were previously a regular food exporter. And why we're importing food today is only because we disabled ourselves on the land. And we can restore that manufacturing capacity by rebuilding their ability to produce. And that will attract foreign investment as well. And from there, of course, all the employment that will increase as a result of that will generate for government the tax revenues, part of which they can use to settle the sovereign debt. But we need the balance of trade surplus.
Very lastly, John, I will ask you this. I mean, depending on who you speak to, you get different projections being bandied around in terms of the potential we have to grow, certainly in this year and going forward. What's your view? If all these conditions precedent are put in place, at what rate could Zimbabwe grow? What rate could we grow at? What rate do we need to grow at?
We need to grow at rates of 8, 9, 10% per year to make a reasonable impact on the problems within a reasonable time, such as a couple of decades, but this is not quick. People who speak of possibilities of 15% growth sort of ignore the fact that we would run out of carpenters and bricklayers and electricians and plumbers long before we could get to that sort of rate. We've got to rebuild our own skills capacity. We're not going to be able to attract them all back to the country. Millions of Zimbabweans with these skills have left. Many of the companies are going to have to train new skills. We will attract back some of the people who left, but the training of new skills, you can imagine 5, 10 years, you'll make a difference to your stock of bricklayers and carpenters and engineers and all the other technicians we need. But that's one of the things that will slow the process. And if we go too fast, the inflation that will come from the scarcity of skilled people will become a problem. So we've got all these separate challenges, but we do need to work very hard to start training people to take up the new jobs that will come on offer as time goes on.
Thank you, John. We must end this discussion here because we're out of time, but I want to thank you for being a guest on the Business Agenda.
My pleasure. Thank you.
I want to thank you for tuning into this edition of the program. My name is Farai Mwakutuya. I've been speaking to Mr. John Robertson, sharing his insights on the future of Zimbabwe's economy, speaking of the need to develop skills, to bring back skills. And we'll be looking at that issue of Zimbabwe's human capital base in future editions of this program. And I do encourage you to stay tuned to this program. You can engage with us and follow us on our various social media platforms, details of which are on your screen right now. My name is Farai Mwakutuya. Until next time,